Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table. Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And folks, today we have a show for you full of energy, about energy, and we're going to even throw in a little bit of extra energy on the side of that plate of energy for you, because it's all about energy today at Money on Tap. You know what? We do have Mr. Dan Mickelin in the house today. How you doing, Dan?
Feeling energized.
Ooh. Ben Brayshaw, what do you have to say for yourself? That's what I wanted to hear.
That's what I feel like with you guys. You're crazy. Oh, man. There's a lot of energy over on that side of the radio there, Seth.
Good luck keeping up. Even though we're 3 hours behind, we are ready to run with the horses today. So if you didn't know, Ben is a planner, a financial planner, and Dan is, and I am too. And that's what we do on Money on Tap, is we have a lot of fun just bringing some of the topics that we're working through in the office with clients, or the discussions that we're having around our portfolios, and trying to bring it to the table in a way that it doesn't turn into a total snooze fest.
Yeah, no, absolutely. I love today's topic. I think the conversation around energy is on everyone's plate, whether you're buying gas or you're thinking about heating your home, or, man, looking at your electricity bill going up because the price of oil that they're burning to create that energy to do your house or whatever, or whether you're thinking about solar panels or, electric car. I mean, every conversation seems to be energy. And I'm just kind of a little overwhelmed, honestly. I'm glad we're doing this topic, because it literally, most of the trading we do, it seems like we're having conversations around, oh, well, that's interesting about what, XYZ stock is doing, or this company's doing, or that company's doing, or what's the Biden administration doing with solar, or, are we going to is everyone going to get a stimulus package for, putting up, solar panels this year? I mean, what's going on here? And I mean, they extended some federal credits this year that they were intending to do a cutback on. So there's just a lot going on here. And I think, between the three of us, I'm really excited about maybe just having kind of a round table and talking about how energy affects your portfolio, and what does that look like when we approach potentially $5 or $7, a gallon gasoline, which is obviously nerve-wracking for us and every listener we're talking to right now.
It's amazing how it's all so integrated around that. I mean, for the longest while here, the last year, it's the hot topics, the hot stocks have been, cryptocurrencies and EV. And, as those have shot up and people began to realize that, still to this day, the backbone of those industries is burning oil. Now oil's up on the rebound, and the gas is going up at the pump, and, we're headed into summer. Everybody finally is getting vaccinated and free to roam, and you get excited. You pack the car, you pull into the station, and gasoline's $1 more than it was last time you looked.
Yeah, I know. You're like, hey, kids, we're actually going home. We got enough gas to get home.
Staycation is extended.
Staycation is extended. That's a good one.
You know what? I think that's a great place for us to just jump into money in the news.
Yeah, taking a look at some of those articles that we collect for the Money in the News area. I saw one that talked about the cost of college tuition rising 33% since 2001, which is really astonishing. I mean, I'm not quite there yet, just kind of getting into the early phases of college funding and planning and all that. I know, Ben, you have been experiencing it and are in the thick of it right now.
Dan, if you want to participate just to get some experience, you're welcome to.
I'm all set. I'm enjoying the fact that I get some time to prepare for this.
I don't want to take away from your learning experience here, Dan.
Oh, no. Well, as usual, I get a feeling I'll learn the hard way. But It's just astonishing, though, to think of it. 33% since 2001. And even looking at the numbers in the article, they talked about an increase from, an average tuition rate of just under $19,000, $18,992 to $27,357. That still sounds like that's way off. I mean, most of the stories I hear with sitting with parents about the planning that they're doing, $27,000 doesn't seem like it gets you there.
Yeah, no, I was thinking the same thing, and when you think about the cost of college, and I think about my alma mater, Liberty. I think about I spent a few years at UNH. I think about the cost of college because, well, actually, I had to pay for it. So
it meant something to you then, huh?
It actually meant something to me. And so when I think about the cost of college, I really think that there's a misunderstanding of exactly what is really going on. Because I look at 18,000 to 27, I think about those schools, and they are way up. They are literally double. I mean, literally double or more. So, I know Liberty looks like it's double based on paper, Maybe it's not. Maybe, like basically what I paid and what they're advertising as their rack rate, maybe that's, who knows, right? But, I mean, I think 33% or whatever is a joke. I think college is way up above that. And, the college planning stuff that we do and working with people and that stuff, I mean, there's ways to try to mitigate those costs. There's ways to try to, qualify for financial aid. There's planning you can do for that. We've done that with, hundreds and hundreds of families, and there's things that you can do. But, I mean, you can't stop the rise of cost of college. And, I was thinking about you mentioned, Dan, I have one daughter in college, and I have a son who's going to college, graduating from high school this year, thank goodness, and looking to bless him with an exit strategy here to college. And my wife probably more so than I. But, he said something the other day because we told our kids we weren't paying for college. We didn't, here I'm a financial planner. I didn't do any 529 plans for my kids. People are like, you didn't do 529 plans for your kids? And I was like, well, I paid for my own college, and I always thought I would help my kids, but it would be something that we would decide to do based on that. And we've basically offered to pay for a small portion of school, and they're responsible for the rest. And we've had struggles and battles with our kids in the fact that we are absolutely 100% committed, my wife and I, to this. And what's interesting is watching my son kind of have come to grips with this over the course of a year of battling about this, to the point where he chose his school. He's a very smart kid, played, D1 soccer here in New Hampshire. He's, great guy. And, but he was afforded a certain amount of money to basically go to school with what we gave him and what he has to come up with. And so he ended up choosing a school that he could afford. Novel idea. And so what was interesting with all of this was that, he ended up choosing the school that, fit his financial budget the best. It was actually the least expensive, but he didn't apply to a bunch of junk schools. But he was telling me how one of his friends is going to school for business. Now, my son's studying, he wants to study engineering and business or something. I'm not sure what all the details were, but he goes, he's going to walk out of college with $285,000 worth of debt, Dad. He's like, isn't that the dumbest thing? And he's going for a business degree. And I said, Colin, you already understand business more than he does. It was kind of a funny experience, but and you guys know Colin both very well because he is a very funny kid. So, but looking at that, I was like, oh, he gets it. Like he gets it.
Doesn't even need to go to school now.
Yeah, like, all right, dude, let me sign your diploma. So, but he understood that, hey, like, what are you really going to get for $285,000? It's not Harvard. It's not Yale. It's not an Ivy League. I mean, the kid was arguing, hey, I'm going to a great school. I'm going to get a great education. I got to be honest with you. I mean, I went to some good schools, and some of the teachers I got educations from who were supposed to be these accolade kind of professors, I never even saw them. I just saw TAs come in, and you're paying all this money. You know what I'm talking about,
absolutely,
right?
Yeah.
And but you go to the smaller colleges and you actually got the professor who's maybe hardened in the world a little bit. And the school you're going to is Palm Beach Atlantic down in Florida. And a friend of mine who's an engineer, a computer science engineer, his buddy is going to become a professor there next year. ironically.
Oh, wow.
And Scott, Keith. Yeah, so he's so he was telling me about this guy, and he's like, this guy has like made a bunch of money, run his own business, done all of this stuff, totally experienced in the world, and he's just looking to give back. He's made all his wealth. And it's just very interesting in this whole college thing. So I'm very skeptical at the business of college, as they say today. So
Yeah, it's a part of the article they reference that, and that this whole golden ticket theory, that what you need for success is to have that college degree. But in reality, that may not be the case as it once was. I mean, people that really do have to examine that, in particular in light of the debt that they're looking to take on. I mean, student debt has grown between 2006 and 2021 from $481 million to $1.74 trillion.
wow, you want to say that again?
$481 million to $1.74 trillion. At least until it gets forgiven, but who knows? We'll see how that works out.
Don't get me going.
Just throw that on the federal tab.
I didn't have a whole lot to add to the article there. The only thing I was thinking about was when we've done some of these shows on like inflation, and I ran the numbers back from 2000 to now, really they are in line what we've had in the past, which is 7%. It is one of the highest that we have on record of anything that we're currently paying for as a society that continues to go up at an astronomical rate. And it doesn't even seem like you said, Ben, like it's true. It seems like it's more than that.
Well, I mean, I got to be honest with you. I remember that 6-7%, and I think wholesalers have told us, people in the industry have told us it's that high. And if you do that math, I mean, over 21 years or whatever this is, I mean, that number's significantly lower. I don't necessarily think I agree with that. But we have another article, just for the sake of time. Fox Business put out an article here on personal finance. I thought this was, actually, I shouldn't even say I thought. Dan found this article. So, Dan, good work. So, this is by Rebecca Lake, and it's really talking about, does student loan debt make it harder to buy a house? And for a lot of parents who are listening to this show, and maybe some of the young people who, we have a decent young following audience that have student debt. I think about my nephew. I think about different people. He's UVA grad and done really well, and but he's carrying some debt, and I'm just thinking about that, and understanding debt to loan ratios is really important for these young people. I mean, refinancing, do you want to drag that debt out longer? What percentage do you have to get it down? Do you want to add anything on this, Dan?
Yeah, well, and taking a look at that, the article states that the biggest challenge the first-time home buyers face is coming up with enough for that down payment. How do you fit that into their budget? And if you are even lucky enough to be able to scrape together the funds to make that down payment, and you take that application for a mortgage, in comes the debt-to-income ratio, and then that's a critical factor in whether or not you're going to be approved. And what they look at is about 43% as being the kind of the top end of that ratio where you'd be eligible to get a typical mortgage loan. So factoring in, what the monthly cost, what that burden is between your school loans and the mortgage you hope to acquire, and be in the position to have the funds to make that down payment, I mean, it can really be a challenge, and coming out of school with what the article states here as an average debt of in excess of $30,000, which equates to about $400 a month. That can be a serious challenge when you're in the early phases of your career.
Oh yeah, you can't save. You can't save for a down payment. You can't afford the house according to the statistical mathematics for banks. I mean. And the government's made it harder to get a home, so, I mean, they made it easier too. And they kind of brought it back. So I don't know if that's a really fair statement. But it's definitely an issue is looking at college. And that brings me back to what my son was saying. He was like, $285,000. That conversation was literally last night. And he was saying, it's like, that's the cost of a home. I mean, these kids are walking out of college with home mortgages already, essentially, but it's just college debt.
That's an incredible burden. I mean, it's a significant challenge for these guys for sure.
And I think the thing on the political realm here, I mean, I think you mentioned the government paying it off and everything else, and I think all of us are like, that's junk. But we're acting as if the government's responsible for this, but the colleges are the one who raised the cost. I mean, they're the ones. I mean, they've got these enormous endowments. I mean, you look at any of these colleges, they are literally some of the wealthiest nonprofit institutions that we don't tax, they've got more money than they know what to do with, and they keep raising the cost. And then we turn to the government and say, hey, listen, we want you to help us pay our college debt to fund more nonprofit, non-taxed organizations with enormous endowments. The thought process there is not sound. And I mean, we have to be making wiser decisions. I tell people all the time, we walk into, people walk into, Best Buy and they look at the TVs and they're like, oh, I need that 80-inch TV. Oh, I need it. And we say it jokingly, we say, whatever. But the truth is that if you can't afford the 80-inch TV, you don't pull out a credit card and go buy it if you can't afford it. We need to live within our means, and that's not being taught. And so we're looking to pop a government to say, hey, listen, let's fund it and pay, Harvard, my bill. I don't want to carry that. It doesn't make sense.
It doesn't make sense to, that the path to success, the way that society's fashioned it, is just taking this massive leap into debt.
The thinking around this is, and has continued to be, you go to college, you get an education, and then you get a job. And that job will provide for your ability to, earn an income, buy a house. And this saddle of debt that's out there right now is completely astronomical.
But right? we're saddling kids. We're saddling kids with debt, and we have 38% of America retiring in a total sum over the next 20 years, and we don't have enough people to do all the jobs. I mean, you can go out and become a plumber, an electrician, HVAC, this, that, and the other thing, and you'd be making $100,000, $150,000, $200,000 a year. You go to 4 years of trade school, like you would go to 4 years of college, and honestly, you don't have to worry about doing Arbonne or any of these lose some weight stuff sitting behind a desk. And honestly, there's a lot of times that I think there's some of that stuff I wouldn't mind doing. I mean, I grew up on a farm, so there's being outside and having fun and doing work, it's fulfilling. And my one son, I keep telling him, like, listen, that kid never has a smile on his face unless he's outside or doing something mischievous. So, I really think, like, your heart's desire, not everyone's meant to be behind a desk. And we have a total world where we have, like, if you were to buy a stock when it's low, buy the stock that's low is, go out into the trades, make a bunch of money.
Try finding anybody to do anything these days. I mean, you wait forever and they show up and it's $200 an hour.
Yeah, hard work, service, show up, do it. Anyways, whatever.
So my friend Kevin that I was visiting with yesterday, we were talking about the trades and what are the opportunities there. And he, because he experienced 2008 and having to leave his industry as a painter, and he said he worked at a sporting goods store for a little bit, and he said he realized he hates retail. And if you love it, then God bless you. We're so grateful that you do, because I could identify that. I'm like, that would really be a place where after being in business for yourself, I wouldn't want to go. But after bringing his business back and looking at the future, the economics around it are pretty straightforward. He says most of the contractors out there are 55 and looking to retire here in the next few years. And there's this huge gap of and need for people to fill that void, and a ton of building going on and a ton of these projects where, boy, their incomes are going to just continue to get higher and higher and higher because that supply and demand for them is there. So, that's one way to definitely start to hedge yourself against that next recession.
No, that's a great point. Our next and last article today is regarding Biogen. Biogen soared this week like 64%. This article is from Bloomberg. Everyone knows I own Biogen. I've been a big Biogen fan of that for a while, which is nice. And but it's about this Alzheimer's drug that they've approved, which is very interesting. And they work with autoimmunes as well. And I think it's a very interesting stock across the board. I'm not recommending buying it, but because it has skyrocketed so high. I mean, I actually took some profit. It's trading around $400 a share now, but it went all the way up to like $460 from in the 200s overnight. The FDA approved this drug. It's the first drug since 2003 that the FDA has allowed through for Alzheimer's. So there's this huge population of people that have been dying for this drug to be available. And they are talking about, with all the COVID stuff and the making of drugs and doing all of that and the fulfillment of it, they They think there's going to literally be lines of people looking for this to get it because it's just the ability to create it. Now, if you want to sign up for this drug, I think it's about $56,000 a year.
Right there. Yeah. 56K is what it'll cost a year.
And that's a shocking kind of event. I mean, the biomedical world is just very, very interesting right now.
An incredible cost.
Aducanumab. That's the name of it right there. It's a new Disney movie, folks.
Japan has worked with them in this. They're a co-owner or something of that. Biogen's right here in the Boston area, and they're expecting an approval in Japan in a while. But it has to do with these things that kind of build up like plaque in your brain, and it's one of the only drugs that they found that does that. And the debate for the FDA is, even though it does do that, the debate is whether or not that plaque kind of buildup really is, and the scientists are arguing whether or not it really is something that's causing the Alzheimer's or not, or is that just a natural substance that is acquired, and some Alzheimer's patients have it and some don't. So it's interesting.
Yeah, this is one that really hits close to home for my family. Both mom and dad have been kind of struggling through some of these similar things and trying to find out what are the resources available, and the drugs that are available really don't necessarily seem to be at all a save for anybody. They can potentially push back some of the effects there, but they don't necessarily work. It's not really a solution. The thing that seems to be working for more people time and time again is the diet, the exercise within the brain, and kind of all of them. It's not like there's one more than another that seems to work. So, that is that's really nice to know that people do have the ability to change the way they eat, or change their activity, or start playing the piano, or playing games with the grandchildren, and all that kind of stuff can really be beneficial here. But to hear what this drug has the potential to be for many of us and our loved ones is huge. Is huge. We really, God, I hope and pray that this is something that can help to save a population for us that's really suffering. And a lot of us know those people as well. Folks, that's going to do it for us on Money on Tap. At least the money in the news part of Money on Tap. We will be right back. And when we come back, there's going to be a little bit of discussion around energy. And if you're not familiar, if you haven't taken a look at this, it's going to be a lot of fun. It definitely is one of those things that we love to bring into the conversation around our portfolios. And also just the bigger discussion, like, I don't know, maybe Tesla, or maybe some solar, or maybe those kind of things that could be solved for the world as a whole. And you're listening to Money on Tap. You heard it right here, folks. You can reach us at 855-226-8551 or info@yourmoneyontap. Don't go anywhere. We'll be right back. Folks, we have a lot of fun doing this show, Money on Tap, and Ben and I have been financial planners for years and years, and our goal here with you is to bring you into the room, have the conversations that we have. We think these are critical conversations for you, but we understand this is a limited space, and what we'd love to do is to open the doors to you with us at Brayshaw Financial Group, so you could experience what it means to have three-dimensional planning in your life. Let's take a look at all sides of your situation, your scenario, and see how we can put together the best plan possible, taking into account your risk. How much can you have in the market? How much do we need to have set aside and doing different things for your life? That's what we do as planners, how we engage with you, and we welcome you to do that with us. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Now, if you have $250,000 that are investable assets today, our planning is free to you. We want you to have the playbook to have a successful experience in retirement. Give us a call, 855-226-8551 or info@yourmoneyontap.com. Ben and I welcome you to Brayshaw Financial for complete wealth management.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Talking about energy here, folks, and we're going to be trying to bring all sides of the perspective here. What are the sources of energy that we're currently using? What has happened lately in the marketplace around energy? What are some of the opportunities that we have moving forward? As we were actually kind of putting this show together, I was reminded of one of my earliest investment conversations with my dad, and that was in solar. And this is going back into the 80s that Mom and him invested, maybe even 70s. It was a while ago. Invested in a company, and it was not something that they were buying stock in. It was an outside of that or direct participation in this investment. At the time, it was such a new, innovative technology that nobody was really bringing it to the table. So it sounded absolutely incredible. It didn't wind up working out. It was one of those investments that left Mom and Dad saying, we need to be a little bit more cautious in what we're doing with our money and how and who we're investing it with. So it was one of those tales for them that I grew up with, hearing a lot about and learning a different side of the story of how did this source of energy start to evolve. And today we are looking at solar in a very different way, not only just as this opportunity, but it's kind of transverse into something that wasn't quite efficient enough to create the energy that we needed, or wasn't at the value that it brought to the table wasn't enough. So it was having to be subsidized constantly to even be a consideration for public usage or consumption. And today it's very different. It seems to be at a level that more and more people are not investing it in such a future idea, but as a current form and viable form of energy.
Energy is one of those things that I look at on a daily basis. I mean, I'm very much focused on energy. I do a lot of trading in energy stocks, energy ETFs of all sorts, all kinds. You name the energy, I'm talking about it at some point. I think what's really interesting here as we look at this administration, there's a large battle going on between oil and the Biden administration. I mean, there is a war on. I mean, if you think about it, we were at sub $2 a gallon gas, and now we're north $3 a gallon. We're approaching almost 100% increase in oil, in the cost of gas, and that's a scary thing. We joked around about it before. We all suffer when gas goes up. I mean, and for some people, just filling your gas tank is a loss in your income. I mean, you're just trying to get to work. I mean, I think about people who work remotely. That's great. You don't have to travel. But as we open back up and people are driving, here in New Hampshire, people drive 20, 30 minutes. I mean, all of a sudden that's, you got a tank a week, and, that goes up, you go from $30 or $40 to $60, $80 a week. I mean, in gas, that's a big jump. And I'm scared because I think about when Obama was in office, and I remember paying north of $4 in Keene, New Hampshire one time at a gas station. And I was like, holy smokes. I mean, those are concerns. I think we're all facing those. And as we open up with the summer, we're trying to come out of COVID. Everyone wants to travel. We got RVs selling left and right. You can't buy an RV. You can't buy it. You can hardly buy a car. You can, boats, jet skis, you name it. We got all this gas going out. Everyone just wants to get out of the house, and yet, we got the forced stay vacation because you can't, as you said, Dan, earlier, you can't get out of the house because you can't afford to on some level. You're definitely going to limit your conversations about where we're traveling, hopping in the RV that, does 5 miles or 7 miles, a gallon. These are conversations going to change travel. It's going to change the reopening story on some level. Now, people are still buying those, and maybe they're saying, I haven't spent anything in over a year on any vacation, so this one's going to cost me twice as much, whatever. I don't think it's going to really hold people back that much, but I do think it's definitely going to hurt our economy on a number of different spaces.
It's just another layer of inflation. It's just something else that's affecting the pocketbook on a daily basis that, I think you're right. I think people have been cooped up so long that initially here that they're not going to hesitate. They're not even going to consider it. They're just going to go do whatever it is that they've been putting off for the last year. But that's short-lived, so that'll happen. It'll be a fun summer that everyone will enjoy. But when it comes around to, fall and winter and you're trying to heat the home, it's going to get real. It's going to be a real problem.
Yeah, no, I agree wholeheartedly. And I think that's going to definitely open up some interesting conversations. I heard that we were taking in oil from Iran for the first time in over 20 years, I think it was. I think it was in, 91 or 87 or something like that. I can't remember. I was telling you about that the other day, and I was kind of shocked by that because we had gone energy independent for the first time. First time we weren't importing oil. I think we were in the Trump administration. And, I look at that, and I've always been pro-independent on that. I think the exposure to COVID and kind of the lockdown scenario of what's happened with getting medications or lumber or anything like that, I think to myself, man, I think we need to be way more independent, just because we can't get anything. I mean, if you inflate our economy so much because you can't get something because everything's locked down, and then you have a gas and oil increase, well, now the transportation costs are inflating. Every time you drive a tube of toothpaste from, some warehouse to XYZ hundreds of grocery stores, that all costs more because of the cost of gas, and those shipping companies are increasing, and it's funneling down everywhere. So the cost of our energy drives inflation at its core. I would say at its heart almost.
You throw on top of that the fact that we're talking about increasing minimum wages across the board. The people working in these warehouses and depots and pumping the gas and all that, that increased cost is going to be passed through. There's no doubt about it.
Yeah. I mean, oil's crossed $70 a barrel. I mean, people think of oil, they think of the wells in Texas and, the bubbling crude, that's one kind of oil. But there's shale oil, which is very interesting. It's mostly found in the, various mountain ranges, and Colorado's a big shale oil place. But it is significantly more expensive to acquire shale oil. Mm-hmm. And, oil needs to be like, I think it's north of $70, or even closer to $85, I think, to actually make it profitable to harvest shale oil because of the increased cost. So I think it's interesting that, Colorado might be more of a player in these various states, and some that have not played a role in a while, that have suffered from that scenario. I'm looking at pipelines. I'm looking at energy companies, and I'm looking at the cost of oil, and I'm saying to myself, knowing about oil and knowing a number of different pieces about it, is that when they drill these wells, like a traditional well, and there's these intangible drilling costs, and all these costs are buried up front. So once they discover the oil, tap the oil, acquire the oil, it's just pumping it out. At that point in time, there's very little management. It's piped, it's metered. They just have people that go and check on it and make sure it's working right and there's no breakdowns. But at that point in time, the cost of barrel is defined right then and there. That whole cost of acquisition is basically there. Now, maybe the pipeline might be charging a little bit more, and there's probably some small variables, but the majority of the cost is all up front. And they know exactly what those barrels cost. So the fact that oil is trading at $70, $72 or whatever, I mean, I think it's, Saudi Arabia and, Kuwait and all these things. They want it to be around $40 a barrel. They're plenty profitable at that point. 72, they're all making a ton of money. And, it's just really interesting to kind of watch oil move up. And I don't know. I just, I could probably get into a bunch of politics here around all of this, but I think there's an apparent agenda, which is spoken, that, the Biden administration wants us to move into, kind of this clean energy story. That's straight in our face, and that's okay. And I'm all for clean energy. But what I don't think people really understand is that as we have this war with oil and we battle through this, all those components to make all that clean energy, all the solar panels, all the this, the steel, the plastics, all this stuff. It takes oil to make it. We have to burn a ton of oil to create all of this stuff, which means that from an investor standpoint, we know that the demand for oil is going to be higher. We know the accessibility to oil is lower because of rigidity. We've shut down pipelines. We're Energy Transfer is dealing with a pipeline issue. We've got the Keystone pipeline stopped in the middle of its building. We've created limitations around oil that is going to increase the cost of oil. I mean, you think about transportation, all these different things. I mean, I think oil, between now and the end of the year, I think energy in itself is going to rise just because of all these demand items and scarcity. I mean, those are kind of simple economics in its play. It's been a big riser for the beginning of the year. I think it's going to carry out through the end of the year. I think we're going to see some of these big companies move more. I also think people are concerned about safety in their money. I think they've seen the market rise and they're saying to themselves, hey, I want to put my money with some big blue chips. I want yield. And what's a safe play? I think a lot of people are going to be moving towards this kind of space because they know the administration wants to see energy pushed. They want to see clean energy pushed. We look at lit and tan. Those are ETFs that, we use and have used. And they're, I'm looking at solar energy. I mean, just the other day, this last week, I had a guy from a solar company come to my house. I want to see what it costs. Why not?
Yeah, I mean, clean energy, green energy, however you think of it, there's no doubt it's the future. But I think we're going to burn a ton of oil getting there.
Yeah.
And when you look at some of the bigger oil companies that are out there right now that, have realized some nice appreciation, that pay a strong dividend, like Exxon and BP. I mean, they're in the process of rebranding themselves from oil companies to energy companies. They're going to have the cash on hand to transition, and they're going to be able to, as they burn and drill for less oil, shift into these other, cleaner, greener energy industries. So I think longer term, bigger picture, they're great companies to be with.
Yeah, I know you think about, and I know, I'm sorry, Seth, I'm taking a big time. I mean, let you speak, but I'm thinking about when you're talking about Exxon. Like Exxon just had this huge board vote for anybody who follows Exxon. And I'm currently an Exxon owner, but I find it interesting watching this activist hedge fund that didn't even have a huge stake in it. I think they got 3 board seats on Exxon to push
2% stake, and now they make up a quarter of the board.
Yeah, and I know, and then they're all about forcing green energy into Exxon. I mean, I don't think about anything but oil with Exxon. I mean, I know, so I mean, I know they do a lot of different things with various types of alternatives, but they're really pushing an entirely different agenda through that. And it's kind of interesting. I mean, there's a lot going on here that's around energy.
Some great topics, some great conversation here. Gosh, we've run out of our first little segment time, so we're going to take a quick break. But when we come back, I'm gonna throw out a few questions for you guys. Just it's interesting, like what this topic brings up for many of us to ask. So don't go anywhere. When we come right back, I'm going to throw some hard balls here for Ben and Dan to answer. And I can't wait to get into that with you guys. You listen to Money on Tap. You can reach us at info@yourmoneyontap.com or 855-226-8551. We'll be right back.
For a number of our listeners, they have a lot of questions, and you might be one of them. Today, we're just offering what we call Zoominars, webinars over Zoom meeting rooms, where we have top experts, Social Security, estate planning, and financial planning experts for you to speak with, do a private consultation that way today. We're also having webinar-based Zoominars where we're going to have multiple groups where you can be part of that and enjoy that as well. Give us a call at 855-226-8551 or email us at info@yourmoneyontap.com to schedule your Zoominar.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We are talking about energy and all facets of energy. I share my little personal experience growing up with mom and dad losing a their pants in an energy deal that just was, it was super high risk. There's a lot of people out there that get pitched energy kind of off the side, out of the mainstream of these conversations. And just my caution is there, just be very cautious if you have people calling you up trying to sell you oil rigs or anything like that. That's just not what we're talking about here. We're having a bigger conversation than that, and it brought me to the question. Now, I don't know if you remember this, Ben, but we're probably going back over a year now. As a fact, it is over a year, because we were talking about some of the energy stocks and how, price of oil. What did it go down to? Like 20?
No, well, it was like negative.
It was zero. Yeah,
it was. Yeah, price of oil was zero.
Yeah.
You actually had to bring your empty barrels to the oil, according to the price of oil, and they would pay you.
Right.
Was it $400 a barrel?
That's what it was. Thank you. I was trying to be conservative. I figured it was astronomical what happened in the industry, and to us,
how do I
we're
buy
looking
oil
at that,
futures?
Holy
quickly?
cow! That is an opportunity for people that are opportunistic, that have a portion of their portfolio to put into these ideas and possibly do quite well. So one of the things that came up in that topic was the what did the cost of oil per barrel need to be at for the Saudi Arabian state to be profitable? And it was an idea that came up.
I remember that article. Yeah.
I wasn't familiar, and I didn't realize they have a whole country that is run off of that cost per barrel. And it's a very much a socialist state that is technically supposed to provide for all of the people through the cost of oil and the sale of oil, not just a company bottom line, but a whole state.
I think Russia's like $29 a barrel. I think Saudi Arabia and Iran and Iraq, those are all in like the closer to 40 or 42, maybe mid 30s. I know that a lot of the U.S. programs I'm aware of, some of them are as low as 35 or 32 to break even on a barrel of oil, but they're more profitable earlier. And that's one of the things. I think they like to keep the price of oil around 45, I think, or 42. I think that's kind of what OPEC generally shoots for. They like to get it higher, obviously, but they don't like it lower. And that lower side is really the killer. I could be wrong. Maybe Russia's the 40 and Iraq's the 29. I'd have to look it up. But it's one of those things that $70 barrel oil is something that is not normal. We saw a $100 barrel of oil a long time ago. We did articles, Seth. Do you remember the articles we did with J.P. Morgan and Goldman Sachs? You can look these up. $200 barrel oil, but that was more around the concern on those days was that we didn't have the storage place. They were shutting down wells, which is a real problem, and they were storing, and our storages were full. COVID was in full gear, and they were concerned about 60, 70 days later being fully opened 100%, all airlines going, everything, because of all the wells they'd shut down. It would be a complete catastrophe of no oil. And they were talking about $200 barrel oil. Now, when you look at, I was reading an article yesterday that they were saying all these, options traders and stuff like that, they're all predicting $100 barrel oil. I don't know. I have no idea. I'm not sure that we're going to see $100 barrel oil. Do I think it's possible in the next year or two? Yeah, I do. I think we're going to see, Dan, I don't know. I think we're going to see $5 a gallon gas, which is going to probably equate to about close to $100 barrel oil. Is that this summer? Is that this year? I'm not sure it's that soon.
I certainly hope not. I can tell you that.
If you look at gas prices across, different regions, different parts of the world, we are relatively low. We have, for the rest of the world, they say, U.S. has got room to run. But it does scare us, because then we start looking at our budgets and what does it take, and at $4 or $5 a gallon, and what is our expenses. It starts pushing the needle for us. One of the things you brought up was the green energy and the kind of the push towards that green energy, and coming from within an organization like Exxon or an organization like Shell. And it reminds me a little bit of, your IBM stories when they were just really on the brink of becoming a dinosaur. And that's kind of interesting because we talk about fossil fuels. But anyways, so I think the idea there is that these are organizations that are prepared to look for and research and move towards not necessarily protecting their interest or their sole interest in oil or fossil fuels, but becoming a leader in the forefront of green energy in some way, shape, or form, because they're already in it. That's their domain. In just reaching out into another section of that domain, it does make a lot of sense.
Yeah.
Yeah, I mean, they have to recognize the fact that the fossil fuel industry, it is finite, whether that's, 1, 10, or 100 years from now, it will come to an end, and these companies want to exist beyond that, of course. But they have the resources, they have the infrastructure, they have the distribution models more or less built, so they want to continue to be a player in the energy world, and they're going to find their way. I do think their interests would be, short term, pretty simple in that they want to keep pumping and selling oil, no doubt about that. But bigger picture, longer term, they have to be looking that way. I mean, the writing's on the wall. We all see that.
Well, there's not a lot of people looking to buy the desert, so I mean, they're not really in the real estate business. I look at oil, and one of the complicated conversations is that all oil trades in the U.S. dollar. And for our listeners, it's like if you're France or Italy, or you're Russia or whatever, you actually have to convert your currency to the U.S. dollar to buy your oil. Now, Russia's obviously selling most of their oil, but there's that currency swap. Saddam Hussein, one of his biggest things was trying to destroy the U.S. by taking oil out of the U.S. dollar. He felt it should be the euro, and he knew that would cause a collapse in the U.S. dollar, or he believed it would. I think that is a very vulnerable spot for our country, and something that changes a lot about where our assets are. Like, where is your money? Is your cash sitting in the bank? Because if they do change something like that in an aggressive stance with OPEC and a big fight with the world on oil, that's a big blow to us. I always tell people, I think owning equities or owning bonds of whatever company that's big blue chip company, I think is better than having cash, even with the volatility of those types of items, because the risk of where inflation can take the dollar, risk of where a no use of the U.S. dollar in oil and gas, however you want to say that, those types of things are vulnerabilities to our currency and the substance and its value at an alarming and very quick rate. So finding alternative ways to store your assets that don't deflate. Even though they might not inflate, you want to avoid the deflation that the U.S. dollar is having with every inflationary event. Now, I look at $5 and $6 barrel, per gallon gas, and I know that this war, I know that the Biden administration wants to have this war because I mean, we talked about this, and Dan and I and Seth, we've chatted about this. When you evaluate an EV car, when you say I want an electric car, you're going to pay a premium for that car. You're like, oh, so I'm going to buy an electric car that's going to save me some money on my gas. But then when you're looking at $1.50, $2 a gallon gas, you're saying to yourself, I don't think, how long is it going to take me to spend $10,000 in gas, right? To accomplish that, because that might be the difference. It might even be more than that. And then all of a sudden,
what is the real green? What is the footprint, right? The carbon footprint of that, because there's a source of energy, and that's the lithium ion batteries. Where we, by the way, full disclosure, our portfolios do have segments of these that we hold right now in terms of the solar world and the lithium ion world, and also energy. But that is a part of the story, is that there's not an infinite source of what it takes to create the battery sources and the energy sources for these other forms of transportation.
And China's a big provider of lithium too. They're one of the biggest providers of lithium, which is another dependence on China.
Well said. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. talking about energy. We've been spending a lot of time talking about the kind of the universe of oil, and what does that look like in reflection in the dollar, and several different aspects. Ben, thank you so much for bringing those to light. It's a fascinating topic and conversation. There's several other places that we do consider energy. Solar, we started with that. There's the lithium ion world where, there's these batteries that we're using to charge, vehicles and the EV vehicle. Now, Dan, I wanted to spend a little bit of time more on the EV vehicle piece there, because I know you have spent more time kind of doing the research on this end and understanding this bit for us. Where do you see, I guess, the opportunities here? What are some of the challenges? What are things looking like in that EV conversation that you'd like to have?
Well, I mean, I think there's challenges on a number of levels, and right now it's the production. I mean, the price production issue. I mean, of course, they're more expensive. The consumer realizes this. I think it's a drag on sales for EV manufacturers, but probably at least as much of an issue is the acquisition of components. I mean, we talked about, Ben just made mention of the lithium batteries and how we source those in China, and with the geopolitical situation that we have out there, between the trading off of tariffs and, just opposition in the South Pacific, there's some real concern about whether or not long-term we'd be able to manufacture enough of these cars to replace the fossil fuel fleet that we exist with. I mean, I just saw an article today about Lordstown, who's one of the major EV players out there, and they've just come flat out and said that they can't afford production. They don't have enough money to build the car that they've designed.
Yeah.
So, I mean, they have that issue. Then there's the chip shortage, semiconductors, all of the parts and the pieces that make up these EV cars that, the administration's telling us we should all own. The reality is we can't build enough of them. Not yet.
We can't build them. And they're not. I mean, unless they get gas to a point where it's excessively excessively expensive, does the EV car become affordable compared to a gas powered car? So that's a complication. I read this one thing one time. It was with 3-6 months. I can't even recall where I read it or how I saw it, but it said that you could run. To power the United States for one day, you'd have to run every battery manufacturer to have enough batteries. You have to run every battery manufacturer day and night, 24 hours a day, for 500 years, for one day for the U.S. I think we don't, as a society, understand our oil consumption. Is it an addiction to oil? Yeah. I mean, because you power your car, unless you got solar panels in your house, most likely you're using oil to create the electricity in your house to power your car. I mean, we don't understand oil consumption. And
how does it across industries as well, Ben? Because you were really touching on that. I mean, people don't realize like textiles and carpet and I mean it's used in the production or through the production of anything.
Oh yeah, almost anything oil.
Every synthetic and plastic material, it's all oil based. Everything.
Yeah. I mean, you want to tar a road? It's oil. If you haven't figured out why it's black. So it's one of those things like that's how it works. I mean, we don't understand that oil is a function of our everyday need. You want to power your cell phone? You need oil. You want to listen to this radio show? You need oil. You want to drive home? You need oil. You want to walk in your house and eat food? You need oil.
One thing that's kind of anecdotally funny, it just came to mind as we're having this discussion. I spent a couple days at the Cape last week, took a little vacation with the kids, and the hotel we'd stayed at a couple times before, beautifully located right on the beach. But it was affordable, and the reason it was affordable is it hasn't been updated since the 50s. I mean, the carpet, the paint, I mean, everything. The average age in this place was 85.
I think I've stayed there.
Yeah, I won't say the name, but the one addition, the one new thing I've noticed and haven't been there in the last 5 or 6 years, they have an electric car charging port.
Oh.
They truly do.
Yeah. Mm-hmm.
That's funny.
No Wi-Fi, tube TVs, no cable, but they got an EV charging port.
Oh, God bless them.
As you were going through the list of what really comes through the lens of oil or what is available through oil, and all of those things that you listed, my answer to them was, yes, I want that. Of course I want that. But I have a real problem because I don't want what I understand to be the problem with oil in our production and in our society, or the lack of it. that it is finite, that it potentially causes, harmful emissions and everything else that we're trying to figure out how to push back on. So with those things, we're still in that dilemma. We hope that it's been a good show for you, and there's a lot of this topic that we just can't even get to. We can't even touch. It's too big, but we're having fun with you, and we love doing this with you. Please give us a call at 855-226-8551 or info@yourmoneyontap.com. As questions come up for you in your planning and your journey of your personal finances, that's what we're here to support in your journey and your next step. You've been listening to Money on Tap. Make it a great week.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.